Hello and welcome, BitMonger family. Quick update on Bitcoin. Look at the price, guys. It is trading now at over $122,000, and just a bit ago I saw it at $122,800. Wow, it is just ripped, guys. I hope you were listening to me earlier and taking a position. You know, if you go back and we look here in my history, I only started this channel about a month ago. I've been investing in Bitcoin for a long time, 8 years now. So I'm retired. But if you had followed my advice and started looking at me a month ago, and just a couple weeks ago when Bitcoin, we saw it dump down to this marker that I had marked off right here, and look at that, it hit it right at 98K. That would have been the perfect place, and I did add to my bags, and I had a levered position there, and it has absolutely printed me a nice chunk of money, enough to live me for the rest of the year. It is just ripping, guys. You gotta pay attention to this. You gotta pay attention. This is going to be your life raft. Not financial advice, of course, but take a look at this. So let's take a look at the weekly chart. We can see it here. Let me spread this out a little bit. Move this down. So on the weekly, you can see I had identified this inverse head and shoulders here pattern, and based on this inverse head and shoulders, I'm predicting that the upside could potentially go all the way up to 136K. As I mentioned yesterday, I would not rule out some sort of pullback. When it has that kind of massive pump, there's usually a pullback, and if it does pull back, it would likely, the support line is around 111K. So you could see it possibly go back down there. 120K was major psychological support, but it busted through that. Wall Street is yet to open this week, so we'll have to see what happens with the ETF demand, whether or not people are selling off there, or they FOMO back in, or if it just kind of goes sideways again. But man, it is looking bullish. Again, my upside target is looking at 136K. 135,864 is the exact number that I got targeted. However, as I mentioned yesterday, we do have institutional demand this cycle. It's not the same as last time. We also have interest rates that are going to be most likely dropping. We have money printers going on. That's going to increase liquidity. That is going to pump all kind of assets, because as that happens, money flows in to the markets, whether it be stock plays or people just add more risk when that happens. So I predict that this could potentially go on for quite some time now. There will be ups and downs. No market goes just in one direction. So the best thing you can do if you don't have a position in these cases is, learn how to analyze some markets and determine, support positions like I mentioned earlier, and then, dollar cost average in, or take positions. Usually the way that you make the best money is when there's massive fear in the market. Buying fear is usually the winner, as long as it's not the beginning of a bear market. Then you don't want to be buying it at all. But I do think we're going to be experiencing a longer term uptrend due to those macro tailwinds of money printing and easing of interest rates going forward into possibly starting in fall and going into 2026. And definitely when Jerome Powell leaves his position, if he hasn't dropped interest rates by then, I can promise you, I can't promise anything, but I would highly suspect that Trump would put in someone who is going to be a yes man. And we all know, if you're paying attention, that he wants to lower interest rates. And when that happens, we'll get that pump. All right. But, it's looking really good, guys. It's looking really, really good. All right. There you have it. Hope you're all doing well, and monger on.